A mortgage refinance is the process of replacing an existing home loan with a new mortgage, typically with different terms such as a new interest rate, loan length, or loan type. So why does someone refinance? Well, borrowers choose to refinance their mortgage for several strategic reasons. The first reason may be to lower the interest rate. A lower interest rate can reduce monthly payments and save thousands over the life of the loan. A second reason may be to change the loan term. For example, they may want to shorten the term from 30 years to 15 years to pay off the loan faster and save on interest. Another option is to lengthen the loan term, which is to reduce the monthly payments. However, keep in mind this may increase total interest paid. A third reason is to switch the loan type. For example, to change from an FHA loan to a conventional loan, or to switch from an adjustable rate mortgage to a fixed rate mortgage for stability, or vice versa, depending on market conditions and goals. A fourth reason may be to do a cash-out refinance, where a borrower can tap into their home's equity for access to cash for home improvements, debt consolidation, education expenses, or other financial needs. A fifth reason may be to remove private mortgage insurance, which allows the borrower to refinance into a new loan once they've built 20% equity to eliminate PMI. The last example for why someone may want to refinance is to add or remove a borrower. For example, in the case of a divorce or a financial restructure. Refinancing can be a powerful tool to align your mortgage with your financial goals, but it's important to weigh the cost of refinancing, like closing costs, against the potential savings or benefits. If you're interested in whether refinancing your current mortgage makes sense, please schedule a call with me today and we can explore your options.